Hello everybody, welcome to another episode of Erickson TV. Kurt is here with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, I understand we have a little history we're going to talk about today.
Yes! Last week the markets made history, and I'm not talking about Facebook or anything else. Last week the yield on the 10-year Treasury bond dropped to its lowest point
in history
ever. In all of history. This is strange. These are new times, and this is not the sort of thing that I ever thought I would be doing a video about when I started working here, that things would get to this point. But I thought it would be a good idea to talk about it because there's two big issues that happen when the yield drops this low. The first thing is, if you want to buy a house, I don't know that there's ever been a better time in history to buy a house.
For the interest rates.
Yeah, for the interest rates.
Because the yield on the 10-year bond has some correlation with the interest rates.
Yeah, that's exactly right.
Okay.
They tend to be set by the same kinds of factors. And so depending on what other sorts of things you're willing to do with your mortgage, according to Fannie Mae and Freddie Mac, you can now get, not everybody can get this, but you can get a 15-year mortgage at 3% now. Now, you and I know that's about the rate of inflation.
Right.
Normally it's about 3%.
Right.
That's a pretty impressive deal.
Right. That'll make a significant difference on many people's monthly payments. And I have been talking to I actually have been talking with some clients who have been taking advantage of this already, and you can actually lock in that rate, like if you start the process right now.
Right. Yeah. Exactly. So for people who want to buy a house, or if you can get a loan, anybody who wants to get a loan for something, this is great news.
Right.
It's not such great news, unfortunately, for a lot of the other people we work with who are retirees.
Or living on fixed income.
Right, who are living on fixed income. Many people who have taken one of my community college classes or who have seen any of my presentations know I always talk about safe withdrawal rates. And I talk about when was the worst time in history to retire with a certain kind of portfolio. Right. The worst time in history to retire with an all bonds portfolio was 1946. Well, you may not be surprised to know that was the record we just broke. Previously, the lowest yield on the 10-year Treasury bond was in 1946.
So what I'm getting from that is that if we're looking at the parallels of 1946, that it may not be a good idea to have 100% of your retirement portfolio in bonds.
No, not this time around. This is going to be very, very tough going forward, and if history is any guide, now will be either the toughest or at least the second toughest time in history to try to retire with all of your money in the bond market. So as volatile as stocks have been, and as difficult as the stock market has been, what has happened in the last 10 years, 12 years of the stock market is not going to repeat, just like what happens over any 10 or 12 year period of time does not repeat. But also what's happened for the last literally 40 years in the bond market, where interest rates have gone from a very high point to a very low point, that can't repeat either, because we're not starting at a very high point.
Right. So I think what we're taking from that, and we'll finish this video, is that if you are in a situation where you're at retirement or near retirement, it's a great idea to have your portfolio check up with either Lauren or myself, and give you some ideas of maybe how to fight this historical event.
That's right.
Thank you for watching this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.